welcome to another edition of Market Marauders. We're beating the market one trade at a time. First things first, hit that subscribe button down below, like, comment, share. So let's dive into it. So today, Fuel Cell Energy Incorporated had their earnings, and it was not as good as initially thought. It was actually kind of bad. So if we look at the stock where it currently is on the day of the earnings, ended the day at 222. So it's still above its moving average 50, which is 119, and it's still above its moving average 200, which is 95 cents. So, it's good that it's still there, but don't know how long it's going to be there. Going into their 5-day chart, if we look at their 5-day chart, we can see it shot up before earnings pretty dramatically. It went all the way up to, it went from about 236 all the way up to I think its peak is 298, so almost $3. Then it fell down to 222. So, its earnings was kind of rough. And, for you guys who are like, why do you go over these videos? Because I'm actually invested in this one. If you go to my Robinhood portfolio, for you guys that don't have Robinhood, I have a link down below. If you sign up with my link, you'll get a stock. I'll get a stock. So that's cool. But Robinhood is where I do most of my trading from. I know there are a lot of other platforms out there, but Robinhood, I've had for the longest time. So that's the one I stick with. So on here it says average cost 37 cents, equity 76.30. So I've been invested in them for quite a while. You can see back in July I bought 5 shares, 37 cents. Bought 24 shares in July for 38 cents and 6 shares for 33 cents. So, I'm pretty well invested with my 35 shares. I wish I would have bought more way back then, but, I didn't really know much about the company, so I'm just holding on, waiting for them to go back up. So, it's just not a random video about, stocks that I'm not invested in. I'm actually invested in this one. So, just letting you guys know. And if you had an opportunity like that, you all could have invested too. And there are opportunities out there in the market like that too. With penny stocks, you never know. Just it's hard trying to hold them for a long time because there's so much fluctuation and volatility when it comes to a lot of penny stocks. So there are opportunities out there all the time. To get penny stocks and trade on penny stocks, and you find the right one, you hold on to it, you'll be profitable, or you can leave and exit it and just collect your profits. For me, I'm just holding on to this one for a little bit longer. So let's go into their earnings. So there's their fourth quarter earnings. Came out today, the 22nd. So if we jump into it, it says revenue. Their revenue was 11 million, which represents a 38% decrease year over year, and reflects the company's previous decision to de-emphasize product sales to focus on utility scale power purchase agreement, so PPA opportunities, and grow our generation portfolio. This revenue decrease was partially offset by the company's increased generation and advanced technologies contract revenues. So, 38% is not a small amount to lose for any company, especially, considering the place they were at last year. To see, that they lost 38% of their revenue is just a crazy amount of money for any company to lose. Now, not saying that the company, is heading in the wrong direction. If you look at some of the previous press releases, they do have a lot of, deals and a lot of contracts that they have that they recently acquired, and I don't think those are directly reflected on this. We won't see those for a long time because they're long contracts, but 38% year over year is a pretty rough number, pretty rough percentage. It says from 1.8 million as a result of acquisition of the 14.9 megawatt Bridgeport fuel cell project in 2019. Which increased generation assets by 113% to 26.1 megawatts from 11.0 2 megawatts on year-over-year basis. Advanced Technologies contract revenue increased by 16% to 4.3 million from 3.7 million due to increased activity, mainly in conjunction with the carbon capture joint development agreement with ExxonMobil Research and Engineering Company. So, the advanced technology contract increased 16%. That's always good. That's one positive note for their earnings, but I don't think it's enough to keep shareholders, still believing in this company, especially when you start off saying, they lost 38% year over year. It's a frightening amount. Uh, Going to service and license revenues decreased by 72% to zero point 0.8 million from 2.9 million, driven by timing of planned service work performed in uh, comparative periods. So, another large decrease from point 0.8 from 2.9 million to point 0.8 million, 72% decrease. Just it's not looking good when it comes to that. If we go to the last one, it says product sales total zero point 0.5 million for the quarter, a decline of 95% when compared to product sales of 9.4 million in the comparable quarter. So it just seems like to me they're just bleeding money, and their burn rate of like losing all this money is not going to be good in the long term when it comes to having shareholders believe in the company. I know in the past there was a large problem with them completing a lot of orders under the last CEO. Then the new CEO, Jason Few, just stepped in, kind of recently, and put them sort of in a new direction. But with these numbers, it's not really looking good for the company to have lost so much. Now, not saying that they can't bounce back from uh, the deficit that they've had, but it's going to be pretty rough to increase that when you have so many losses. Um, and it just really hurts to see the company do this poorly, especially when there were such high hopes. And you could even see the stock rallied around it being a good press release, but it ended up not being that good of one. So if we go to they had another press release that came out the same day, so it came out after the quarter earnings came out. So it says Fuel Cell Energy launches new business strategy. So it says 2019 key accomplishments and recent developments in our engagement with Huron Consulting Services LLC after successfully restructuring our business and operations and paying off our senior secured credit facility. Closed on a new $200 million senior secured credit facility with Orion Energy. Improved capital structure by uh, retiring our Series C and Series D preferred stock obligations, entered into a new 2-year joint development agreement with ExxonMobil, which we just touched on previously, announced the strategic relationship with On Business Solutions, relaunched our sub megawatt products in Europe commercially, including our 250 kilowatt and 400 kilowatt SureSource solutions. Um, in addition to offering our SureSource 1500, 3000, and 4000. So that's basically their different products. So this is their different products. The 1500, 1.5 megawatt of clean, affordable power. The 3000 is 2.8 megawatts, and their 4000 is 3.7 megawatts. So that's what they're referring to. Here's some pictures of the facilities of the fuel cells. And this is all stuff that's on their website. It's under products. You guys can go look it up. I'll put a link of it down below as reference in the description. So going back to this article, um, advanced our solid oxide power generation, electrolysis, and energy storage application by executing on our existing Department of Energy contract and earning a new DOE project award. So, That's just some of the highlights. Um, and I feel like this is kind of like like a save face sort of thing, because their press release of their earnings was so bad. Um, but I think it's going to be harder in the future for people to invest, seeing how poorly they've done. I mean, yes, it's a good thing that they have all of these um, you know ventures that they're going off in, and acquisitions of new projects, but I think structurally they're going to have to find a way to increase their revenue, in order for people to, rally around being invested into the company. Because when a company is bleeding money that fast or losing that much money year over year, it's not showing growth in the company. And that's what everyone wants to see, in a stock price. You want to see the company grow. Because, I mean, it was way back at, you guys saw, I bought it at 37 cents back, like penny stock, and it's still penny stock, but it definitely had some improvement. But I don't think that was directly reflected with uh, this press release and this earnings. This earnings just shows, maybe it should still be valued at a 37-cent stock. So I think they have a lot of work to do moving forward, and I don't know if it's a management problem or a production problem or what's really going on with the company, but I'd like to see some more press releases moving forward, other than just um, uh, new business strategy press release. I'd like to see press releases of more projects and completion of projects moving forward, to see how the company's actually doing. I think that'll help out the shareholders a lot more, to see, them getting projects and them completing projects, and then also increasing their revenue, because 38% of a loss in revenue is quite a bit. So to see an increase of revenue and for them to be profitable, that's always a good thing. And I think that'll help. If in the next quarter they can be profitable, I feel like that can help them rally around people, the investors rally around purchasing more of the stocks. Anyway, comment down below, subscribe, tell me what you guys think. Fuel Cell Energy Incorporated. Tell me if it's still a good buy, or people longing it. Do you think that they have potential to continue to grow, or do you think it's done for them as a company? Drop a comment down below. Like, comment, share, subscribe. I'll see you guys next time.